Today we're talking ETFs, so that I can be able to help out people that don't know what ETFs is. Well, hello friends, welcome to Rewake videos. My name is William and I'm so excited that you are here. So excited. Please, if it's your first time visiting us today, please make sure that you hit the subscribe button, hit that notification button, comment down below, and also hit that like button. The like button helps me to know that actually you like the content that I'm releasing, and I'll be able to release more and perhaps challenge you and help you to be able to grow in your finances. Today we're talking ETFs, right? So as you know, I don't like taking time. I used to make videos that were about 40 minutes to an hour. They performed well because they were tutorials, but I just, want to run lessons that are 10 to 12 minutes. So don't blame me. Don't blame me. But today we're talking ETFs, so that I can be able to help out people that don't know what ETFs is. My information comes from investopedia.com. Check it out. It'll be able to help you with some other terminologies that you need help with. So what is an ETF? An ETF is an exchange traded fund. Right, it's an exchange traded fund. So an exchange traded fund is a pooled investment. It's a pooled investment security that can be bought and sold like an individual stock. So you can buy an ETF like you are buying a stock, right? Like you are buying shares. So ETFs can be structured to track anything from the price of commodity to a large and diverse collection of securities. So ETFs, okay, but I'll give you examples. So ETFs can be designed to track specific investment strategies. Various types of ETFs are available to investors for income generation, speculation, and price increases, and to hedge or partly offset risk in an investor's portfolio. The first ETF was SPDR, S&P 500 ETF. So I'm sure if you invest a lot offshore, then you would know that particular ETF, because a lot of people are making money through that. So how does an ETF work? An ETF must be registered with the Security and Exchange Commission. It has to be registered. So this information is particularly for people that want to manage ETFs and so forth. But I want to give you an example so that you can be able to understand what they are. So they wrote here key takeaways. An ETF is a basket of securities that trades on an exchange just like stock does. So let me repeat that. An ETF is a basket of securities that trade on an exchange just like stocks. ETFs share prices fluctuate all day as ETFs is bought and sold. This is different from mutual funds, which only trade once a day after the market closes. ETFs offer low expense ratios. So ETFs offer low expense ratios and fewer broker commissions than buying the stock individually. So like I said in a previous video, check it out, where I speak about banks and ETFs. ETFs, they are cheaper when it comes to commission for broker commission compared to buying stock or shares straight up. So when you invest in ETFs, you are more likely as well to save money than you are buying straight shares, right? So here's the example that I want to give you when it comes to ETFs. There are different kinds of ETFs, right? So we have passive ETFs. Let me see if I have time. Okay, I have time. So passive ETFs aims to replicate the performance of broader index, either a diversified index such as S&P 500 or more specific target sectors or trends, right? Actively managed are quite pricey because they are actively, as hence the word managed. Do not target an index of securities, but rather have a portfolio of managers making decisions about which securities to include in the portfolio, right? So we have bond ETFs used to provide regular income to investors, and distribution depends on the performance of underlying bonds, which may include government, corporate, and state and local bonds. Also, we have stock ETFs, right? I talk a lot about top 40 ETFs and so forth. So we have stock ETFs, a basket of stocks that track a single industry or sector, like automotive or foreign stocks. The aim is to provide diversified exposure to a single industry, one that includes high performers and new entrants, which with growth potential. Like, unlike stock mutual funds, stock ETFs have lower and do not involve actual ownership of securities. So we also have, I'm not going to explain industry or sector ETF. I'm going to explain commodity ETF. Invest in commodities, commodities like crude oil or gold. So a lot of people are interested in mining, so that is included commodities. We also have currency ETF. We also have Bitcoin ETF. So we have a lot of ETFs, right? So that's one thing that you need to be able to understand. So I speak a lot about property. I speak a lot about top 40 ETFs in South Africa. So it's important for you to be able to understand that, because once you understand that you it's easy for you to say that, okay, I'm interested in property. So therefore, let me invest in ETFs, that maybe 5 ETFs or 2 ETFs that have property ETFs. Then after that, perhaps if you have more money, you can say, okay, I want to invest straight in stocks of a particular company that invest in property. Right? Like, for instance, your Redefine and so forth, right? So when you have that information, then you can be able to make a decision that will be beneficial for you as an investor. So ETFs are important because they help you save, and they help you make money, and they pay dividends, and they pay on time as opposed to investing in a particular company where they can decide one day, good to know, we're not paying dividends this year because of the financial constraints that we are going through. And an ETF as well, when a company is not performing well, they can take it out and put in another company. So ETFs are good, right? So there are also pros and cons, right? Remember, I spoke about, for cons, I spoke about actively managed ETFs. Actively managed ETF have higher fees simply because they are actively managed. There are people that are sitting down and they're saying, oh no, let's take out this company, let's do 1, 2, 3, 4, and so forth. There's for cons as well, single industry focused ETFs limit diversification. So when you have a portfolio property ETF, some property ETFs, they may be direct. We are only investing in these 10 companies, right? But there are other property ETFs, they are more diverse, that have more companies within their exchange traded fund. So others can limit your diversification. So lack of liquidity hinders transactions. Those are the cons, right? But here are the pros. The pros are access to many stocks across various industries. So you can invest in many companies at the same time using one ETF, right? Low expense ratios. Remember, it's a bit affordable. Broker fee commissions lesser. Risk management through diversification. And ETFs exist that focus on targeted industries. So guys, ETFs are good. ETFs can help you to diversify your portfolio as well, and ETFs can help you to be able to be safe in your investment, because if I have invested, if this is a company and there's another company and there's another company, and I've invested in the ETF that has all these three companies, and one company doesn't perform well, I know these two companies are performing well, that you'll be able to help you. That should be able to help you to be able to see that, hey, I'm making profit. Oh, they've taken out that company and they placed in another one, so I'll be able to make money and so forth. So I encourage you to invest in ETFs. Remember, I'm not a financial advisor, nor am I registered with FISCA, but I encourage you to look into ETFs, make researches, go to places like Investopedia and research. Go to shshares.com, research investing.com, so that you can be able to have the information that you need, so that you can be able to invest better. Guys, that is me. Thank you so much for joining me today. Hit that subscribe button, hit that notification button, communicate with me so that I can know that you like the video and you want me to do videos like this on a regular basis, so that we can grow together and make moolah together, especially information. Information is everything. So thank you so much. Share this video with friends. Thank you. Enjoy your day.